Okay, the first item on the agenda is minutes, approval of the minutes of June 22nd, 2021. Could I have a motion? Rob, thank you. Rachel, second. Any questions, comment, changes, additions? Seeing none, let's have a vote. All those in favor say aye.
Aye.
Opposed, nay. Motion carried. Thank you. Monthly financial report. Hi, Julie.
Good afternoon, everybody. Thank you, Chairman. This is the 5th month, so this is our last month before property taxes start to hit, so it'll be fun to see how those numbers change next month. So far, we are already at 40% of our receipts for the general fund budget compared to last year was 30.7%. Thank you, Chairman Rand, for distracting the audience. General County, which make up 65% of the general fund budget. So outside of property tax revenues in General County, we're already at 57% of what budget is. So we're doing really well. All the subtotals, so our first subtotals, we are, anything that should be receiving revenue to date, we are near the 41.7%, so we're doing really well there. Expenditures are 4.6% lower than last year. We reduced expenditures overall about $830,000 or 5%. And so far, year to date, compared to 2020, we've closed the gap of about $4.3 million, just a little shy of that. So with reducing expenditures and the increased revenue, general fund is still doing well. So sales tax year to date, January to May, we're just about $1 million higher than the budget expectations. So that includes all sales taxes and use taxes. As you guys remember us reporting that January 1st was the first month of the Level the Playing Field Act. So we are starting to see those revenues be really strong. Charges for services are meeting, just a little bit exceeding budget expectations. So we've recovered a little bit there. And income tax is 4 out of the last 6 months has been the highest receipt month in the last 24 years. And so income tax is doing really well. And then PPRT tax in July, we actually had the highest receipt that we've ever had in the last 22 years of just about $1.2 million. So general fund revenues are going well. And there wasn't any new funds added to the funds to keep an eye out for the change in fund balance for the reserve policy. And next month, some of them should fall off once the property tax hits. So those are a few highlights, and I'm happy to answer questions if anyone has any.
Julie, have you have any reason to, why the personal property tax, replacement tax would go up?
Yes, I do. I have, I don't know if it's in, I have the explanation in there, and I have a few notes in here.
GDP is up 7.5% across the country, so we've obviously got to be getting our piece of that.
Yeah, a lot of the businesses have exponential returns, and a lot of the industries that performed well are performing better than expected. I have a little paragraph I can send out to everybody.
Except for the hospitality group, they're still struggling.
Can you repeat that?
Except for the hospitality group, they're still struggling.
Right.
Any other questions from anyone? Oh, thank you, Julie. Appreciate it. Okay, Paul has a death in the family, so we won't have a Headington Oaks financial report this time. Legislative update. Scott?
On the state level, Mr. Chairman, nothing specific to report. On the federal level, we're in monitoring mode of both infrastructure bills that are in the Congress, the first one being the bipartisan bill, the second one being the larger Democratic led bill. And like I said, we continue to monitor the progress of those two bills, and we'll evaluate what potential revenue sources we would most likely have to be chasing should those bills become law. Happy to try and answer any questions.
Any questions for Scott on the legislative update? If not, you want to go on the ARPA?
Sure thing, Mr. Chairman. Just a couple of things for the committee on this. Our first report to the U.S. Treasury is due on August 31 of this year. The interim guidance has had a couple of modifications and revisions to it, most notably in terms of how they would impact us. We are of a size that we are not required to solicit citizen feedback, but we've got a SurveyMonkey all ready to go. In fact, it's live. We just haven't advertised it yet. We'll be doing that after today's meeting and in the coming days for the citizens of Peoria County to provide some input and some feedback on how the county should spend its $32.4 million allocation. And then secondly, when we file that first report on August 31, we should have a general plan for how we're going to use the allocation. In talking with you and Vice Chair Relaford when we sat down and reviewed the agenda for today, we laid out to you a strategy on how what that might look like, and I'm happy to walk through that real quick at a very high level, which is really what we'd be reporting to the U.S. Treasury. So if everyone recalls, there's 6 categories in terms of how we can use that allocation. First is supporting public health responses. Second is addressing the negative economic impacts. Third is replacing public sector revenue loss. Fourth is premium pay for essential workers. Fifth is water and sewer, both sanitary and storm infrastructure. And sixth is broadband infrastructure. We're looking at and recommending, not formally recommending today, but where we would be looking to recommend to the committee and the full board is the following. Using the formula that's in the Act and the guidance provided by the U.S. Treasury of our total allotment, everything except $2,403,420 would be applicable under the revenue loss category. In terms of how we would then allocate, we would recommend that $2.4 million, we'd be looking to recommend that $2.4 million that is not covered under revenue loss go towards the categories of supporting the public health response and addressing negative economic impacts as it specifically relates to the social determinants of public health. We would look to be partnering with the city of Peoria for a like amount to pool resources and take an evidence-based approach to trying to resolve and work on some of those issues in our community. Second, we'd be looking at an allocation looking to recommend an allocation of $2.5 million for broadband. That could be used to then leverage a component of $7.1 billion allocation that was in the Act that went to the FCC specifically for broadband. Those would be dollars we would have to chase through a competitive grant-making program process, but we have the ability to do that. I think, as I've told many of you and as said before, I would not recommend that the county get in the pipes and wire business, but we should be partnering with the private sector that provides broadband services to our residents in figuring out ways to extend the broadband infrastructure to those that have slow or no high-speed internet access at their homes or businesses. Third, in a potentially a program that is really yet to be defined, but up to $1 million for small business assistance. And then under the broad category of replacing public sector revenue loss, a total of $28.9 million for capital improvements. That would be split with the first 14 million going towards the HHS campus, and the remaining 14.9 for other capital improvements. We would obviously be working with Mr. Salzer's committee to prioritize projects that we could use those dollars on. And then at the request of Mr. Renault, we're actually running some calculations now to see what the financial impact would be of if we were going to offer any premium pay that's permitted under the Act. So in a very high level, Mr. Chairman, that's what we would like to bring forward as a recommendation in the future. Happy to answer any questions or have a discussion about that now, or we can have that discussion when we bring that back in a more formal setting.
Anyone have any questions for Mr. Sorrell? Seeing none. Thank you, Scott. Appreciate that. Okay, first we have a resolution, FY 2021 appropriation of the 2020 general fund for surplus budget for moving funds to where we have loans, to close out some loans. You want to give a more in-depth discussion on that? It's in the write-up, but.
Yeah, Mr. Chair, once you get a motion in a second, I'll have Julie explain the item.
Thank you. Motion, please. Paul? Ms. Blair? Okay, thank you, Julie.
Good afternoon again. In 2020, we had a general fund surplus of just over $5 million, so $5,050,850. So with this surplus, we will be at, the general fund ended at 47.5% reserve policy, which is about 23.5% higher than expected. So in discussion with Chairman Fennell and Chairperson Relaford, there is a proposal to present to you today to use the surplus for a few different reasons. There is 3 internal fund loans. One is in the form of committed fund balance, and and 2 others are interfund loans. These total collectively $3,334,000 and some change. The one loan is between Huntington Oaks and Employee Health. It's just about $1.16 million, and that is outstanding, and that was used about 2014, I believe, for reducing the size of the bonds for building Huntington Oaks. The second loan was just a few years ago in 2018 when we did the Willow Knolls and Allen Road. So there's about $895,000 roughly left over for the county's portion for that. And then the other one was $1.23 million committed fund balance to pay for the reconstruction of Radnor Road and Wilhelm Road back in 2006. We also refer that to as the Growth Cell 1A agreement. So after that, those uses are taken care of. We have about $1.7 million left over, and the proposal is to take $1 million and put that to the risk management fund, and that will, in 2020, the risk management fund ended with a negative fund balance of just over $650,000. So as of 2020, it will bring it up to positive fund balance, and in 2021, we do have the budget built to replenish fund balance. So assuming that we don't have any really high unforeseen claims coming in, hopefully that fund will be positive at the end of the year. And then the other use would be about $716,000 to capital, which that's on another resolution. So this resolution before you right now is to approve, if you so desire to clear the 3 interfund loans and then to move money to the risk management fund. If you have any questions.
Mr. Rand?
I'd move to approve.
Any other comments?
Go ahead.
Yeah, we have a motion and a second already. So any other comments? Steve?
Yeah, in review of this, I support this. I think this is a good way to clear off of some of the loans and inner internal loans that we've made and to clean up that balance. So I'm a strong supporter of this. That's all. Thanks.
Thank you. Okay.
Mr. Chairman, before you call the vote, Julie, would you just quickly explain to the committee the impact on fund balance for the two that are due to employee health and the one that is due to Keystone?
Yes. I have a little cheat sheet. Let me pull that up. Okay. So let's start with the easiest one. So the gross sell 1A, which is the money due to Keystone, that is right now recorded as a committed fund balance. So in general fund, you have the fund balance reserve as of 2020, which I don't have it right in front of me at that hand. So let's just say it's 15 million. So of that 15 million, 1.278 is committed, so that the board years ago committed that that money is going to be paid to Keystone. So with this approval, that money is going to go, general fund will decrease, fund balance, and then Keystone will increase. So cash will go down, Keystone cash will increase. For the other two loans, which are between matching tax and employee health, and then employee health in Huntington Oaks, the transfer will reduce the general fund balance, so that's the easy part. And then it's going to go to the fund that owes the loan. So for the employee health in Huntington Oaks, it's going to increase the fund balance in Huntington Oaks. And then the cash that is used is going to then reduce the liability that Huntington Oaks owes the employee health. And the employee health, the amount to be received will be gone, and then cash will increase. So balance sheet wise, for employee health, you're just moving it from one asset account to the other. So instead of promising to have money received, it's just in cash. And the same thing is true with the other loan between matching tax and employee health.
Okay, any other questions? If not, well, Mr. Rand.
Thank you, Mr. Fennell. Ms. Daly, I think we're all aware of your desire to make sure that funds that may be available to us at the present time be spent retiring bond debt where possible, and you're okay with this? That's the first yes I've gotten out of her. Ever.
I don't believe that. Yes, as we all do.
As we all do. We'll put you on the agenda. We'll put that on the agenda. We're all working towards the same direction. This is just low-hanging fruit.
Options is, would you rather have us pay off the debt you're going to be paying in property taxes, or would you rather have us spend this on some new capital project?
I think there are 18 votes today to not use SurveyMonkey to make fools of ourselves. So it's on the calendar as part of the 21 budget process.
Thank you. All right. All those in favor, signify.
Could I ask a question?
Sure, Phil, go ahead.
And I agree with you totally, how we're handling this money and this surplus. But that's one thing I want to ask Scott. Simple question. Why didn't we end up with a surplus? How did we end up with a surplus?
Great question, Mr. Salzer. We ended up with a surplus for a variety of reasons. First, on the revenue side, our revenues were better than we budgeted and nowhere near as catastrophic as we thought they would be March and April a year ago. On the expenditure side, we approved, or you approved, pretty substantial cuts last year across the board, and the resulting difference between what those cuts were and the organization performed better than those cuts, so they came in under budget across the board, in combination with the better than anticipated revenues created the surplus.
Plus we had carryover from last year's surplus.
Sounds like a lot of very, very responsible decisions.
One other thing I might say, we ended the year with a surplus last year too, so
Did we?
that was part of it, so it just increased that surplus. Okay. All right, ready for both, Steve?
I just want to make sure clarification. I think this was the 2020 surplus number
Correct.
that we're
Yep.
adjusting. So
Yep.
it was the surplus we ended with at the end of the year. Obviously, we're going to get an audit report, so it all ties in together, right? So it's not the current surplus, it was the 2020.
Right,
Okay. Just want to make sure I was clear. Thank you.
that's correct. Okay. Any other clarifications? Okay, let's vote. All those in favor, aye?
Hey,
Opposed? Unanimous, thank you. Okay, Julie, you gonna handle the next one also? Okay, this
I
is a
will as well.
FY 2021 appropriation of the 2020 general fund surplus budget to capital projects fund.
Correct. Thank you, Mr. Chairman. So
Now, can I have a
in,
motion, please?
oh, sorry.
Ms. Blair, Steve. Okay, now go ahead.
Okay. This is a continuation from the one before. We did desire to separate out capital just in case there becomes a discussion. So we have requested before you to move the $716,000 that was not approved in the last resolution to capital, and then to also add an appropriation to building improvements in order to spend that. The project before you that is suggested would be roughly $500,000 estimate to replace the roof on this wing. I know I can tell you in our office we have had facilities up there multiple times in the last years trying to settle leaks that sometimes takes months to resolve because they're very difficult to find. So that is the current project before. Obviously, there's a couple $100,000 balance, so at a later date, there can be another project presented, or we can just see how the year progresses. And if the money is unspent, then we can put that in next year's budget for spending.
Any questions or comments from any members? Mr. Rand?
If it's 500, why are we moving 750?
Mr. Rand, what we'd be doing there is, whatever, once that's put out to bid and you award a contract, we would go to Mr. Salzer's committee and work with that committee to prioritize whatever the remaining balances for other capital that are in the capital improvement plan that have already been identified but are not funded at this time.
Thank you.
Mr. Dillon?
Mr. Sorrell, and you can probably answer it better, but I think we went from like 1.2 million to 100,000. So
Correct.
basically we have 100,000 for the entire county maintenance. So if a water heater goes bad, that's where we pull that money from. So in reality, with all the complexes we have, and you know from work on your houses, $100,000 doesn't go very far, especially in something. So even that 200,000, I think is probably more considered the rainy day fund for either like when these glass down here was broke or a mechanical system going, that would basically just be enough to cover that, because to go from 1.2 to 100,000 for maintenance. So I envision that's probably more just for general maintenance than actually a project. Would I be far-fetched on that?
That's certainly a possibility, Mr. Dillon. We can, working with Mr. Salzer's committee, we can figure out what the priorities should be, and we'll provide some information and some recommendations to the infrastructure committee on how that should be allocated, and in fact, all 716,000 should be actually allocated. That really is a policy decision for Phil's committee and the board. Our initial recommendation is to look at the roof of this side of the building, because those dollars are not enough to tackle the roof at the JDC or the jail. But when Mr. Salzer's committee meets next, the committee might have other priorities, and we'll obviously implement whatever those are.
Any other comments, questions? If not, all those in favor signify by saying aye. Aye. Opposed? Motion carried unanimously. Thank you. Okay, discussion report. We have external auditors. Thank you.
Brian Lefevre will be presenting the audit. I do have copies, hard copies of the audit and any of the reports he might talk about in the other room. So if you raise your hand, I can come get them if you would like it. Otherwise, the CAFR is online, and the other reports, if they're not online, I was out when they were uploaded. I'll put them out there. So just to let you know.
Good afternoon.
Good afternoon.
On behalf of SIC, I'd like to thank the chair and the members of the committee for inviting us to present some brief comments related to the audit of the county for your year ended December 31st, 2020. As part of that audit, just wanted to kind of convey to you what the process is and the process that has evolved over the last 2 years of audits due to COVID. So basically the 2019 audit, when we were doing our field work, is when, kind of the world changed, if you will, and put us into a remote auditing environment. 2020 audit continued that, albeit we were on site for a few of our testing, which to make things more convenient for the county in terms of documents that are not as easy to load into our portal electronically. So the audit cycle began back prior to end of the county's year in November with the planning meeting. Our preliminary testing, where we do a lot of our risk assessment and review of internal controls and procedures, was completed in January. And then our final testing, what most people think of the audit, where you're looking at a lot of documents and various numbers on the county's financial statements, occurred in April. A draft of the report was right on time in May, and then everything was finalized in June. So our commendations to the county's team for keeping everything on track. A lot of Zoom calls, if you will, to make sure we all knew what our part was in the process, and ultimately resulted in the issuance of the comprehensive annual financial report, as Julie mentioned. So the comprehensive annual financial report, which is the largest of the documents that were issued, has 3 sections to it: an introductory section, a financial section, and a statistical section. The financial section is required under Illinois compiled statutes for the audit of the county. And that would be an annual financial report. The county has elected to present a comprehensive annual financial report, which includes both an introductory and a statistical section. And related to the last item on your agenda, in the statistical section, you can find historical fund balances of the general fund over the last 10 years, so you can kind of see what those trends have been. And I encourage you to look at that. The statistical section also has some very good information related to property tax rates, property tax extensions, et cetera, for the county and other overlapping taxing districts. Within just a few highlights of the comprehensive annual financial report, within the introductory section, I would encourage you to read the letter of transmittal. Kind of gives an overview of the profile of the county, economic conditions in the county, some of the major initiatives, and also some financial policies. So for many of you, that information will be not new information, but you can read that and say, yeah, that's exactly what we've been a part of here at the county. Following that transmittal letter, a few pages further back in the introductory section, is the award that the county received for its 2019 comprehensive annual financial report. It comes from the Government Finance Officers Association, the Certificate of Achievement for Excellence in Financial Reporting. This was 33 consecutive years that the county has received this award. So congratulations to you all. This is the highest level of financial reporting within the local government industry. Now, what you engage Stickage to perform as an audit of the financial statements ultimately results in the issuance of an opinion on those financial statements. That opinion is found as the first document in the financial section on regular page number 1. And in order for us to give an opinion on the financial statements, we're required to follow 2 sets of standards. The first set of standards are the auditing standards issued by the AICPA, the American Institute for Certified Public Accountants. And those tell us the types of procedures we need to perform when we're conducting our audit. The second set of standards are the financial reporting standards, and that comes from the Governmental Accounting Standards Board, or GASB. So GASB tells us what your financial statements are required to look like, and also the notes to the financial statements and other statements that you see in the overall comprehensive annual financial report. Once we follow those 2 sets of standards, we can then issue an opinion on the financial statements. We're pleased to present an unmodified opinion, and what that means is that the financial statements are presented fairly in accordance with generally accepted accounting principles, free of material misstatement. And this is the highest level of opinion that you can receive on your financial statements. So once again, congratulations to the county and all of the departments, which is a county-wide audit, all of the departments that participate in the audit in that regards. What you will see on the 3rd page of the opinion, no different than what you saw last year, is a reference to government auditing standards. Government auditing standards references the federal requirements for a single audit or grant compliance audit anytime the county spends more than $750,000 in federal expenditures. In this particular year, the county expended $7.2 million in federal expenditures, so therefore a single audit was required. That separate document was also issued, the single audit report, and I can summarize that for you in the course of a few items. First of all, there's 2 opinions required to be issued in that document. Both of those were unmodified or clean opinions as well. One is the unmodified opinion on the county's compliance with laws and regulations that could have a material impact on your financial statements. That was an unmodified opinion. And then the second unmodified opinion related to our testing of your major programs. So based on the size of those programs and the rules put out by the federal government, we determined that the COVID-19 Relief Fund, along with the WIC, or Special Nutrition Program for Women, Infants, and Children, those were the 2 major programs that were required to be tested for the single audit this year. We had an unqualified opinion on both of our testing of those 2 programs as well, with no findings related to those programs. The one financial statement finding that was repeated in the single audit report and also in our separate communication of significant deficiencies in internal control relates to your Penimation accounting system, which I know is in the process of being replaced through your new ERP system. So you do see responses to that comment, but it basically relates to your user controls. This is consistent with our finding from the prior year, and we knew that the timing was such that this would not change until you implement your new ERP system. The last document I'd bring to your attention in the comprehensive annual financial report is the management's discussion and analysis. This document is the executive summary of the comprehensive annual financial report. For those of you that can see this, it's a large document, right? So where do I start? I don't have time to read the whole thing, or I just want to get the nuts and bolts. You go to the management discussion and analysis. This is prepared by the county. It compares 2019 with 2020. Gives you very good explanations of increases and decreases in your major funds. I would encourage you to read this as well in your overall review of the comprehensive annual financial report or audit reports. The one other document that was issued, which was the auditor's communication to the county board and management. This document has 2 purposes. One is under those auditing standards, we're required to communicate certain things to those charged with governance in any audit that we perform. So this is our communication of that those required communications, if you will. Nothing earth-shattering in there, and nothing of the course of any, there were no, disagreements with management, things of that nature. If there were ever anything like that, you wouldn't be hearing about it after the audit was done. There'd be a dialogue that was going on with the chair, both the county board chair and the chair of this committee related to that. Obviously, there were no discussions that we had of anything like that. Of significance, when there's an audit done of financial statements, it's not uncommon to have the auditor recommend adjustments to those financial statements based on their testing. We only had one proposed audit adjustment, so for a county of this size, that shows that your staff are working very hard to get things adjusted properly for the audit. And trust me, in a year like this where there was a lot of grant activity, and then add to that COVID and the auditors not always being able to be out here because of COVID restrictions, hats off to the county and its team for only having one audit adjustment. We did have a couple of small recommendations which the county has responded to in that document, and then there were a couple comments from last year's audit that were implemented by the county. So really what I consider to be a lot of good news. In conclusion, if I haven't mentioned it already, the county did a great job being ready for the audit. Our team worked well with the county team to make sure that we all stayed on track. And that concludes my comments, and I'm happy to answer any questions that you may have.
Any questions from any board members? Comment, I would have to say the one of 18 makes us all feel very good when we receive the highest rating of anybody, and for 33 years of that, it certainly makes us all feel like things were holding the ship up properly and doing the job. And credit to the finance department and all the elected officials and everyone in their departments that's doing the job to make this happen. We appreciate that. So any other comments from any board members? Mr. Ricker?
I would just want to echo your comments, Mr. Chairman. This is a great outcome, and again, I think multiple years we've had good return on the audit. So first off, thank you for performing the service and going through the details, Brian. I appreciate that. And again, thank you for the finance team and all of the county employees who contribute to following the rules of GASB and reporting. So well done.
Sharon?
And quickly kind of going through this, I previously had served on Ways and Means, and we had a discussion about P cards. I see in here that the status says that it's considered implemented. I haven't heard anything since we had that discussion, more than a year ago. So I was just wondering what was implemented on that, please?
So the issue that arose last year was that there was not a second-party review being done for all purchasing cards, and there was a second-party review implemented during the current year.
Different for different people.
Typically, the second party is going to be either the department head or elected official if it's a subordinate in that office. If it's the elected official or the department head themselves, it is any variety of folks. I use myself as an example. The assistant county administrator and the chief financial officer have the ability to review and approve or deny my P-card statement each month. And so the strategies we implemented met the test of Sickich, and that issues from their perspective has been resolved. To answer your question, Ms. Williams.
I guess when we had talked about it, so I just want to be clear. So if a elected official has a P card and their subordinate is the one that is approving their P card expenditures?
I think it potentially could vary by office. I obviously don't see every financial report every month. I don't want to put anybody on the spot, but if whether the county treasurer or Julie have any additional information that they would want to provide, I'd ask them to come to the microphone.
Mr. Chairman, if I might, it might be just easier to ask the question being asked, and that is, Madam Treasurer.
And have it emailed to, is that what
No,
you're?
I think in light of the auditor's answer to the question, I think I'll just ask it because I don't care. Nicole? With regard to P-card expenses by the Office of the Auditor, are they co-signed by a secondary person that meets the policy directive or not?
In the auditor's office, it's signed by her and one of her subordinates.
Okay, so that's the answer to the question. She is not having a superior, equal, co-equal, elected member of the staff sign
No.
her expenses. Okay, thank you.
Mine is signed by me, my subordinate, and then it
Well,
goes to the auditor's office for final.
I'm quite certain. Thank you. Does that help, Sharon? I got your question answered without any more. Well, no, it's a violation of policy, and we'll have to tend to it. Thank you, Mr. Chairman.
Okay, thanks, Brian. Any other comments for Brian on the audit?
And Mr. Chairman, I just have one, also to echo the thanks of the committee members for the team throughout the entire organization that worked on the document. Brian, just one quick question. How many of your public sector clients prepare their own financial statements? About?
Very good point. So what you have before you, the financial statements themselves are prepared by the county, and then the notes to the financial statements, we assist with those notes based on the work papers provided by the county. So of county governments, I don't know many other county governments that prepare their own financial statements. When you add in municipalities, you're still probably under 5%. So I appreciate you pointing that out. I mean, it's a major endeavor to prepare the financial statements. But what's interesting is those auditing standards assume that every unit of local government and any type of entity prepares their own financial statements. The reality is under 5% do. So you're definitely in an elite group, and you should feel good about that. So I appreciate you mentioning that, Scott.
Mr. Rand?
Thank you. I think because while that was clear as day, the implication is that the Office of the Peoria County Auditor has insisted on preparing our financial statements years after we created this quality finance department with civilian employees. So the reason we're in that 5% is because we've done it the right way and literally eliminated 7 or 8 employees that came out of the treasurer's office back when Mr. O'Connor was treasurer, plus added 6 or 7 to create the finance department when Mr. Urick was the executive. I think my numbers are correct. So, good for us. Sorry the other folks haven't caught on, but that's the implication of that answer.
Thank you. Looking around again? No other questions, comments? All right, thank you again, and Scott, I hope you give back to all of the people involved the kudos and thanks for their hard work, because we certainly appreciate it. I'd like to have them here today where we could clap our hands and thank them for it, but I think that'd have a room full. There's a lot of people involved. Thank you. Thank you.
Thank you very much.
Mm-hmm. Okay, miscellaneous. Is there any miscellaneous to come before the meeting? Seeing none, I will adjourn.